Hey everybody, Logan Alec, CPA here from Choice Tax Relief. Today, I'm going to read this post on Reddit from somebody who has not filed their tax returns in approximately 20 years, and then I'm going to share my thoughts on what an individual in this situation should do, just with the limited information shared in the Reddit post. All right, so let's get into it. I'm going to read it. It's not long. It's like 5 paragraphs, and then I'll share my thoughts. All right, so this individual says, haven't filed in approximately 20 years. I assume that little thing here, tilde thing, means approximately. And I'm going to say he, could be a she, I don't know, I'm just going to use he for simplicity. So I haven't filed taxes in approximately 20 years. First 10 or so, I was self-employed, struggling majorly with life. I didn't pay anything those 10 years, and some years made around $80,000. I had one child. The next 10 or so, I've made far less money, could still claim that dependent for the first few years, but had only one deduction taken out, and paid through payroll deductions, but have not filed. The past 10 years are not nearly as concerning. Let's go on to the next paragraphs here. I know the IRS looked for me the initial years as they were sending things to an old address, and they filed on my behalf for at least 1 year. That's an SFR. When they're saying the IRS filed a return for them, they mean the IRS filed a substitute for return for them. An SFR is create a long 40-minute video about the ins and outs of IRS SFRs. Link to that video at the top of the screen and in the description below. I want to finally take this one. I don't know quite what they mean by this phrase, but I want to finally take this one, but I have no clue where to start. Due to the depression and mental health struggles, I don't have proper record keeping for these first 10 years or so. The companies I was independent contractor for are long out of business. I don't remember their names. I likely have some of the 1099s, definitely not all. Nearly all my documentation for business expenses is gone stored on old, long gone PCs. I have a few thousand in savings, so not really in a position to hire a professional. I know that would be best, but it likely won't be feasible. Can anyone give me next steps? If the IRS only has 10 years in transcripts, how do I go about filing for those first 10 years as if my own records are crap? Would the logical first step be to call the IRS and say I want to get things right, file the past 10 years that are less concerning? So there's a lot of stuff going on here. Right, but in these situations where somebody has not filed in approximately 20 years, and they know that the IRS has filed an SFR for them, first task here is to figure out what tax years are in their best interest to file. Okay, and in general, there are exceptions to this, but in general, you want to file at least the last 6 years to get in compliance from the IRS's perspective. And then for any year that the IRS has filed an SFR for you, it's generally in your best interest to file a return for that year, because on the SFR, the IRS is generally significantly overstating your liability, right? Because they're not giving you a credit or exemption for dependents. They are assuming your filing status is married to filing separately. If you're married, or they think you're married, or single, if they believe you're unmarried, right? When you could, in actuality, file as head of household, which would give you lower tax rates on your income, right? And this person that may very well be the case for this person. They said they had one child. I don't think they ever mentioned a spouse in here, so I'm guessing their filing status would be head of household. But on the return the IRS did for them, the SFR, they're going to say they're single. Business deductions, right? They were self-employed, 1099. The IRS doesn't give any business deductions on the SFRs, right? So if you just get a gross 1099, that's a really high amount, but then you have all these expenses, so your net was actually lower. IRS isn't going to estimate those expenses for you. You have to self-report them. Right, so first thing we do, right, when we get a non-filer who comes to us, is figure out, and sometimes we can just, we can do this over the phone, right, when they describe their situation. Okay, it sounds like you need to file this, and this, right, subject to further investigation when we actually, start doing their returns. But that's the typical game plan. File the last 6 years and any years for which the IRS has filed an SFR for you. Of course, for the last 6 years, some years you may not have been required to file. So you wouldn't necessarily have to file those unless it's in the last 3 years, because then you'd still be eligible for a refund, right, for those years. So, and if you didn't get your stimulus, right, you probably want to file 20 and 21 to get the stimulus as the recovery rebate credit for those years. Okay. All right. So another thing here that I wanted to mention is the expenses. Right, so now we figured out what years we need to file. Okay, well, next step is figure out the order in which you should file them. Okay, and typically we like to go chronologically. Typically, right? Because sometimes there's carry forwards or carryovers from one year to the next. For example, if you sold a lot of stock at a loss one year and you wiped out all your capital gains with that loss and you took the $3,000 against your ordinary income, you have what's called a capital loss carry forward. We're seeing a lot of that these days with people who have lost money in stocks and crypto. So that capital loss you can carry forward to future years to offset your capital gains in future years, or if you don't have any capital gains in future years, or your capital loss carry forward still exceeds your capital gains for future years, you can deduct $3,000 a year, $3,000 a year against your ordinary income, right? There are things like this. There's appreciation if you have rental properties, things like that, right? Which is a good argument for why you should just go chronologically. Now, there are some exceptions to that, to be sure. For example, right now as I'm recording this, it's in early October 2022. Okay, if you filed an extension for 2022 and you're going to owe for 2022, it is in your best interest to get 2022 filed before October 16th, 2023. Right, because that's the extended tax deadline, or else you're going to be hit with a failure to file penalty on that's based on the amount of tax you owe on your return. Right, 5% per month or part of the month, up to 5 months. So there's things like that. Yeah, if you have a refund statute date coming up, right? For example, your 2019 return, right? Let's say you got an extension on that. That was the weird year where they made the tax deadline in July instead of April. You could get an extension until October, right, of 2020 for your 2019 return. When you get that extension, it extends the refund statute too. That's the 3-year time period you can get a refund. So if your refund statute date is coming up, like for 2019 here in the next couple weeks, you'd probably want to prioritize filing 2019 before that refund statute expiration date expires, right, before that 3-year time limit on when you can get your refund for 2019 expires, which is 3 years from either the original due date of the return, or if you filed an extension, the extended due date of the return, right? Obviously, if you filed in there, it would be from the filing date, but I'm assuming you didn't file. So it'd be the extended due date if you got an extension. So there are some exceptions there. There are some others too. I'm not going to get too deep into the weeds on that in this video, but there are some exceptions why you wouldn't necessarily always want to file chronologically, right? But generally, chronologically, if there's not a strong argument, otherwise should probably just file them chronologically, or at least work on them chronologically. I do want to mention another thing here. This individual knows they filed on my behalf for at least 1 year, right? And it sounds like they were sending things to an old address. So they could have filed for other years for her too, and made assessments of tax on other years, filed SFRs for her, made assessments of tax for those years, and sent those notices to an old address. Because and I'm saying she now, because she hasn't filed a return in a very long time, the IRS doesn't have an updated address for her unless she filed a change of address form with them, which I doubt she did. So, so that leads me to the next thing here, which is it's possible the IRS filed more than one SFR for this individual, right? How could she find out? Call them up, ask for the balance by year, ask if any SFRs were filed for each year, right? And the IRS will tell you, or they'll tell your representative if you hire somebody to figure all this out for you. So you'd want to file those years as well, probably, right, to reduce the liability. There's another consideration here that we as professionals kind of utilize, and it's the collection statute expiration date, right? So, if there's a return where the IRS did an SFR, did an assessment, 9.5 years ago, and there's been no tolling events, well, that tax debt might actually be dropping off here, right, in the near future, and so it may not even be worth the trouble to go and prepare an SFR for that year due to the collection drop-off date. However, for a year you haven't filed for which the SFR is done, or which the IRS has done an SFR for you, it's often, the date of assessment is often later than you might think, right? Because we get people who come to us and say, oh, the IRS, they did a replacement return, they did an SFR for 2012, but it should have dropped off by now, right? Because it's been over 10 years since 2012. Well, the answer is no, because they probably actually did the SFR, actually prepared the SFR, or through the ASFR system, automatically prepared the SFR, probably maybe a year at the earliest after the original due date of your return, right? At the earliest, right? And the assessment would come after that because they got to give you these notices, right? 30-day notice, 90-day notice, things like that, before they actually make the assessment of tax. Okay, so the assessment might not have happened for the 2012 year, if we're talking about an SFR here, until possibly 2015. Right, so the tax debt might not be dropping off as early as you think it might be. This is one of the things we ask for our clients who have not filed and who have SFRs. This is one thing we research for them with the IRS to see exactly when this tax debt is going to drop off. Okay, so I think we've talked enough about figuring out which years to file. Now, how do you actually file these returns? Especially when this individual, as many people do, says they don't have proper record keeping, right? Well, she says for the first 10 years. She might not even have to do those first 10 years anyway for reasons I've spoken about previously. But let's say, she was an independent contractor, 1099. There's some years that she needs to file, right? Either because the SFR balance is just so grossly overstated because the IRS doesn't give you any deductions other than the standard deduction, or because it's in the last 6 years and she needs to get compliant, right, and get caught up. So what to do in this case? Well, there are methods that can be used to estimate expenses. There was a tax court case, or there's a court case called Cohen, some people say Cohen, that basically established that you can estimate expenses for your business in certain circumstances. And we do this regularly for our clients because we have a lot of clients who come to us. They're 1099 and they have absolutely no business records, right? None at all. But they obviously did have business expenses. Every business has expenses. So what do? We reconstruct expenses. Okay. I'm not going to get into that here in this video. It's kind of a lengthy process. I don't want to say it's proprietary, but it has worked very well for us, and it results in an extremely low audit rate. So I will say there are solutions here if you don't have expense records, right? You will probably get a better answer. You'll probably result in a lower liability if you actually prepared your full set of books, right? But if we're estimating and reconstructing, we're generally a little bit on the conservative side, but definitely more aggressive than a lot of firms out there who are not going to give you any deductions unless you can prove them, and which I think is ridiculous because some people, they just get behind and they lose their records or they never had them in the first place. So that's one thing I want to mention there. Another thing I want to mention is that you can get your wage and income transcripts for the last 10 years from the IRS. So let's say that you've determined you got to file, XYZ tax returns. Well, it's going to be more than that probably, but these tax returns, but you don't have any of your tax docs, right? This individual says, I likely have some of the 1099s, definitely not all. So that's okay. The IRS has records of the 1099s on your wage and income transcripts, which you can pull, which you can request from the IRS. You can also set up an IRS account and pull those. For years older than 10 years, right, the IRS does not have wage and income transcripts for you. Now, the only reason that you would probably want to access records for those years anyway for an unfiled year is if the IRS prepared an SFR for you for one of those years, right? In which case, you could do what's called a FOIA request, Freedom of Information Act. This isn't just a tax thing, it's a government-wide thing. But basically, the gist of it is you have the right to know the basis of the IRS's assessment against you. Okay, so if there is an assessment against you based on an SFR, you can do a FOIA request to request that file. Okay, so, and we do this, routinely for our clients who have found themselves in this situation. Maybe I'll pull one up here. Okay, so we had a client who the IRS had done really old SFRs for, and wage and income transcripts weren't available to do their returns. And so what we did is we did what's called a FOIA request. We have an employee in our office. Her name's Lulu Peralta. And if you worked with my company, you may have been assigned to Lulu. She's one of the case managers who does these requests for us. This is our old address, actually. Our new address is in Los Angeles proper. But anyway, so, we requested, here we go. And I redacted all the client's information here. But, you asked for all documents associated with the substitute for return document locator numbers for tax years 2007-11, including any existing wage and income information that was used to create the assessments, right? And so they gave us 118 pages responding to the request. And this is so lots of professionals don't know about this. I'm not going to show you the 118 pages here, A, because I haven't redacted them all, and it would have sensitive information on it, and B, it's too much to get into here. But this is a tool at your disposal. It's tricky though. Sometimes the FOIA, for one thing, it takes a long time, for them to get it to you. Sometimes they reject it, and you have to say, well, actually, no, blah blah blah, and here's why. So it can be a lengthy process, but at the end of the day, it's often worth it for our clients who have SFRs filed against them. What else here? When you request wage and income transcripts, request unmasked wage and income transcripts, because if you don't say unmasked, the name of the issuer and their address and their EIN, except for the last 4 digits, I think are going to be asterisked out and redacted. But if you ask for unmasked wage and income transcripts for filing, they'll give you the full. They'll give you wage and income transcripts that say the full information of whoever issued them, which is helpful if you want to e-file. Right, because when you e-file returns, you need to put for most tax documents the full name and address and EIN of the issuer. But kind of biggest thing here is if you're working with a professional on this, make sure they don't just dump right into just filing all the returns. Right, last 10 years or first 10 years, definitely not all 20 years. Okay, so often we have seen people who are in situations like this. They have not filed for 10 years, 20 years, 30 years, ever. They're in their 50s or 60s and they say, I've never filed. Sometimes you'll get some CPA or EA or just some tax preparer who just doesn't know what they're doing, and they will just file all the years. Right? Oh yeah, let's just look. You got to file all of them. You have an obligation to file all of them. And that's obviously nice for the tax professional because they get a nice fat fee, right, for doing all these years of tax returns because the person's scared. They want to get this taken care of and get caught up. But they don't know. And, tax preparers who do that, I think most of them just flat out don't know that there's actually a strategy here. And they're doing their client a disservice by filing years and creating liabilities with penalties and interest for old years that maybe they shouldn't even have filed in the first place. Or they do know, but they're greedy. And I've been around a lot of tax pros, and I think most are in that first category. They just don't know, because they're not specialists in getting non-filers back in compliance and putting together that strategy, right? Or even estimating expenses for them. So that's my take. Anyway. All right, so those are just some thoughts that I had on this Reddit post. It was kind of off the cuff here. I have other videos that are a little more structured than this. This was kind of like stream of consciousness about what to do if you've gotten behind on several years of tax filings. And one of those videos is right up here on the left-hand side of your screen, top left. And my whole playlist of those videos is down here on the bottom left of your screen. So anyway, hope you enjoyed this video. And feel free to ask any questions in the comments below. You can, of course, reach out to us at Choice Tax Relief at 866-8000-TAX to schedule your free consultation, or just fill out the form at choicetaxrelief.com, and we'll reach out to you. All right. Hope to talk to you soon. Hope to see you soon on the next video. Bye-bye.